The Indian market snapped two sessions of gains and ended in the red after inflation for the month of May accelerated, raising concerns that RBI may cut rates less aggressively next week. The Sensex slipped 203 points or 1.2% to close at 16,678, and the Nifty declined 67 points to end at 5,055. The wholesale price index for the month of May accelerated to 7.55% from a year earlier on back of rise in fuel and food prices compared to 7.23% for the month of April. Core inflation, however, continued to fall and was estimated at around 4.85% for the month of May. Investors turned jittery after the recent 4.1% up move on the Sensex on concerns that RBI may cut rates less aggressively next week. Foreign brokerage CLSA said that RBI had no room to cut rates after they revised the April inflation data upwards. Elsewhere in Asia, markets ended in the red. In Europe, the markets were trading lower after the Spanish government bond yields touched to a high of 7%, raising widespread concerns of the widening Eurozone debt crisis. In India, interest rate sensitive banking, realty and capital good indices were the top losers after the recent run-up. From the banking space, ICICI Bank was down 3.5%, Axis Bank declined 3.3%, and State Bank of India was off 3.1%. In the capital goods space, L&T was the top loser, down 3.9% after a 17% run-up since the beginning of June, and BHEL was down 1.5%. From the realty space, Indiabulls Real Estate was down 6.4%, Unitech was down 5.7%. Top losers on the Sensex were Tata Motors down 4.6%, NTPC fell 3.8%, and Maruti Suzuki declined 2.6%. Major gainers were Infosys up 1.1%, Cipla gained 0.6%, and ITC was up 0.3%. Technical analysts said that Nifty was unable to trade above the 200-day moving average for the last couple of days in spite of the decent run-up, which triggered profit booking after the inflation data and concerns in the Eurozone. Markets will take cues from the RBI policy next week on Monday and the Greece elections over the weekend.